Hello, everyone, and welcome to another LinkedIn Live slash Facebook Live about the world of finances. I am the JP Morgan Chase Deploy Fellow for Blue Star Families, and my name is Brittany Latatone. And as we all know, tax season is pretty much among us. It is almost here. And I wanted to ensure that our audience at Blue Star Families is prepared for the long road ahead. Today, we have none other than the military money specialist herself, Atia Ingram.
Yay.
And hello. And she will walk us through some of the need to know things about tax season. So before we get started, again, my name is Brittany Latatone. I am also an active duty United States Marine Corps spouse. I have two little girls. My experiences in education and mental health. But of course, in this role, I am the JP Morgan Chase Financial Wellness Fellow. And to my left, we have Atia Ingram. She is an active duty United States Marine Corps spouse as well. She is
Yes.
currently stationed in VA, and she currently works as a government contractor, and she provides financial counseling, everyone, and education to members of our military and their families. She is also an author of the Mill Spouse Guide to Using the Military Spouse Residence Relief Act, something we all need to know about, and is a professional income tax preparer. So, in addition, she also started her business, Ingram Financial Management LLC, in 2011. So let's get started, Atia.
All
So first,
right,
I definitely
Brittany.
want to thank you for being here today. And I have to ask you before we get started about taxes, what made you start your own business? And I asked this because my last Facebook Live was on spouse entrepreneurship. And in that live, we learned that out of more than 12 million military spouses in the US, 48% are self employed or business owners or aspire to be. So, and this is according to the Military Spouse Chamber of Commerce. And also, I want to do a quick shout out to Tina Rubens, Atilia Marie for these wonderful earrings that she provided for me. She was on my last Facebook Live. So, definitely go to her site, everybody. But back to you, Atia. So, tell me a little bit, why did you start this business?
Yeah, well, thanks again, Brittany, for having me. I'm so happy to speak to the Blue Star Families community. For me, I've always been an entrepreneur at heart. I was that little kid who was always like figuring out what I can make and sell, so I had extra money. I come from a family of entrepreneurs, so it's always been, in my blood and just discussions that I've always had with family. And then as I, of course, took on the role as military spouse, it did take me a little while to figure out, what I wanted to do. Like a lot of us trying to, just figure like my place. And then with moving all the time, having children, I have 3 children. So it just made sense for me to have the flexibility with my schedule, to still be there for my children. I was a stay-at-home mom for a long time. So it just gave me the opportunity to build something on my own at the pace that I was comfortable with. And that also gave me the flexibility to move all over the world with my Marine. So it's been great for me and my family.
That is awesome to hear. I'm so glad that you were able to, one, find stability and find a career that moves with you.
Right.
So definitely. So I want to ask you, Atia, can you share some information about that book that I mentioned and the importance of military spouses using that specific guide?
Yeah, absolutely. So I get a lot of questions because it is a big issue for military spouses, residency relief and what state they should pay their taxes to, and really how to avoid overtaxation from states when they move to a new state. Say, you're a Texas resident, but you move to California because of these active duty orders, and you don't want to pay California taxes. And so I decided to create, really, it's more of a resource, right, book for spouses of all branches, That way, you have this free tool. It's on my website, and you can get it at Amazon, or I can send, people a copy for free. That's no problem. But definitely, it outlines every state that has a tax requirement, and it gives you the link to the actual form you need to submit to your employer, to your HR department, so that those states' taxes are not withheld from your pay. That's the best way to do it, to prevent taxes from being withheld from the beginning. That way you don't have a filing requirement in that state that you're not a resident of, and you don't have to seek a refund of those withheld taxes. So if you can get that guide, find the correct form, and submit that to HR as soon as you're hired, it'll save you a lot of headache down the road. And we have to keep in mind, the military community we feel like it's a big community, right? But it's small in comparison to the United States workforce. And so most HR professionals have no idea what these forms are. Those employers have no idea what these forms are. And, we're going saying, hey, there's this thing where I don't have to pay taxes, and they have no clue what spouses are talking about. So again, this guide gives you that tool, the resources to, just get the forms you need, submit it, and keep that extra money in your pocket.
That's awesome, Matia. This is pretty much like a one-stop shop. And I see that somebody is asking for the name of the book again. And we're going to provide links at the end for everyone with the link to Atia's website. But it's called The Mil Spouse Guide to Using the Military Spouse Residency Relief Act. So let's jump right in, Atia, talking about taxes. So as promised, we want to know about the top five need to know tax tips that military families need right away. So, what are those in your opinion?
That's a great question, Brittany. I'm going to base my top five tax topics or tax issues, based on the questions that I'm asked the most and what I see when I'm preparing tax returns for military clients. I would say about 95% of my clientele, come from the military community. So the first thing that I see is PCS expenses. And I think we'll touch more on that later on, Brittany, but, just generally, active duty military can still deduct PCS expenses, of course, to an extent, and we'll get into that in more detail. But that's the first thing, because that's just money being left on the table that you could get back. The second thing is residency. So we just touched on that. But residency, not only as it pertains to the military spouse, but also to the active duty service member. So, for example, if a service member is from the state of Florida, the state of Florida should be on the service member's LES or W-2. When they get PCS orders, to Pennsylvania or Virginia, wherever it is that's not Florida, they do not become residents of that new state that they're there, just to serve on those military orders. I see a lot of service members incorrectly, going to their pay personnel and changing over to Pennsylvania or Virginia in this scenario. And, it's especially costly if you are from a tax-free state like a Florida is on your LES or your W-2. And now you get, orders to Camp Pendleton. In our case, we're Marine, right? So we get orders to Camp Pendleton, and now you become a California resident and your income is fully taxable. So you just really want to be careful. And again, we touched on the impact of residency for spouses and how that residency can be shared. So that's, a great thing. Again, if that service member, they have to have the state, on their W-2, on their LES. It doesn't matter what license they have. None of that is relevant for tax purposes. Whatever is on the official document from DFAS is what the IRS and the states are going to use. So the spouse can, in most cases, claim residency the same as their service member. So that's a huge plus, and a lot of people just miss that. So we want to take advantage of those types of opportunities to save money there. The third thing I would say is underutilization of the Roth TSP, our thrift savings plan. With the new blended retirement plan, that's the new retirement plan for service members, they're automatically investing in their TSP, which is wonderful. but a lot of them are not selecting raw TSP, which means you pay taxes today and you don't pay taxes later on. So
Yeah.
for most of us, especially our younger enlisted or our newly commissioned officers, their income tax bracket is not as high as it will be in the future. So it's better to pay the taxes today for the majority of us in the military. And then, again, in the future is tax free. And that's especially important if you know you have a career field where you're going to be going into a combat zone often. Because if you're entering a combat zone, we all know that's tax-free money, right? We've been trained enough to know that. So when you have your allotment already set in TSP through MyPay, right? That's where you make those changes to your TSP. If you already have that set for raw TSP and you enter a tax-free zone, not only have you made tax-free money, and that tax-free money has gone into your raw TSP, and you don't pay taxes on the way out. So there are very few things in life, right, where you can avoid taxation altogether. And this is one of those things for those of us, again, who are able to deploy to those combat zones and want to take advantage of that. And lastly, and I won't, speak too much in detail on this one because we'll go into it later on. The 10-year stop the clock rule for military landlords. So we have a very unique niche when it comes to tax law and whether or not we can still claim a home as our primary residence to avoid paying capital gains taxes, on any profits we made from real estate. And Brittany, 2021 was crazy with the home prices, right? So a lot of
Yes.
military, a lot of landlords took advantage of that, which was great, and sold those rentals to make a profit. So that's a very important tax rule you want to be aware of. That 10-year is called stop the clock. So if you're having a preparer do your return, that's what you want to make sure they're aware of that as well.
Wow, that was a lot of great information and a lot of great tips. I'm definitely going to be playing this back and taking some notes for myself of things that I need to know. So thank you. It seems like you really do have to pay attention to your LES though and what it's saying and
Yeah.
make sure that it has the proper information up there. So
Exactly. Yeah,
yeah,
that's the official document. Not your license, not where your mom lives, not where you went to high school.
yeah,
It's what's on that LES.
definitely. Thank you for pointing that out, Atia. So now moving into something that to talk about a little bit more of what should military service members, spouses, and veterans look for when they're looking for a tax professional? Like what type of credentials should they inquire about before hiring someone to do their tax preparation? Because a lot of times military families are pushed to those free resources. So tell me a little bit about what credentials and things should they be looking for?
Absolutely. That's a great question. So, there are many different acronyms, right? And different titles and letters we all have at the ends of our names. So, as far as taxes go, I guess the three main categories you have is a registered, preparer, somebody who has registered their practice with the IRS. And I think, Brittany, will drop that link in the chat later on because you guys can go right onto the IRS website and search for tax preparers to make sure they have taken the time to register with the IRS because there is a requirement for them to do that, where they had to have CEUs, they're staying up to date on tax law. And that's actually what I do as a professional. So I go on because I'm an accredited financial counselor, through the AFC program, but I, in addition to that, register annually with the IRS to let them know, hey, I'm a paid preparer. I've done all my CEUs. So that's something you want to look for. Another thing, of course, we have EAs. Some people may not be familiar with that term, an enrolled agent. That's a type of preparer. They have a few more capabilities as far as representing taxpayers, in front of the IRS. So if you need representation, like you are worried, you're going to get audited, something's going to happen, you don't want to go and talk to the IRS or go to tax court, the enrolled agent might be the way to go. And then, of course, there's a CPA, which most people are very familiar with the term CPA. And CPAs are registered in their state. And typically, I mean, like most of us have a niche that they work with. Some CPAs, are focused on large businesses, some are small business, some work with individual. So that's just for you to ask those type of questions for the CPA. But no matter what designation the individual has, when your taxes are prepared or you pay someone to prepare them, you need to make sure they are signing the last page of your 1040. The second page of your 1040 has a section on there that says paid preparer signature. If they leave that blank, and if they're not putting what we call a P10 number, which is our preparer tax ID number, then that lets you know that they're not registered with the IRS, because all of us, no matter what credential we have a P10 number, and we have to report to the IRS every tax return we prepare, and sign it. That's our signature. So if, you're paying for it and then you're submitting it to the IRS or someone else is without signing it, that's telling the IRS you did it yourself. And so you're going to be held, accountable to any questions. That person, has no accountability as far as the IRS is concerned. So be leery, of that, and just keep an eye on that. But those are the two main things I would look for.
Thank you so much. Everybody be looking out for that P10.
Yeah, P10.
Right, for that signature on that document.
That's right.
And definitely, again, we'll have those links provided so you can definitely look more into that. So, as we discussed with you already, as our families, we move a lot. And these moves are very, very costly.
Yes.
So, we were talking about, what to deduct for families who have gone through PCS moves, like does storage count as a deductible? And what if I move overseas? What happens then? So, tell us a little bit more about that.
Yeah, absolutely. So, of course, as a military spouse, we're getting ready to take move number 14. Okay, you almost lose count after a while. So
Oh my
we're
goodness.
going to move number 14 this summer. So this is a deduction that I personally use at least 13 times. Every time we move. So a few of the most common things people miss as far as the move deduction are the movement of your pets. And this is especially relevant for those of you moving overseas, right? The cost to fly your pets overseas can be in the thousands. So, that's something you want to keep your receipts. You can write off, and the military does not reimburse you for the cost of pets. So that's definitely one you don't want to miss, that pet deduction. For overseas moves, and even, CONUS moves, CONUS or OCONUS, the shipment of your vehicle. So oftentimes we are only reimbursed for one vehicle to be shipped. And if you have a household with 2 or 3 vehicles, you may have to pay out of pocket. So keep those receipts. You can write that off. And I'll also include like what I tip my movers. I'm a mover tipper, right? Just because I want to feel like, okay, y'all do a good job with my stuff. Don't break my stuff, right?
Right.
So I would definitely include the cost of that. So those are really like the main things. Storage is limited if you're doing a CONUS move to just 30 days before UPCS. So, some people would like to clear out their house or maybe get a pod or something like that so that they can get it ready to rent, those type of things, but you only have that 30-day window. But if you're doing an OCONUS move, then you can deduct your storage fees. If you, kept a storage unit or stored a vehicle and are paying out of pocket, those you can deduct every year.
Okay, great. I wanted to touch on that a little bit more, and I just actually thought about this. What about people that do Diddy moves, right? And some of that, they pay out of the pocket, and then they get like a reimbursement from the government too. So in that case, what then count? So does anything count in that case if you're doing a Diddy move?
It would be the same for a Diddy move. In fact, most service members actually fare better with the Diddy move than, as far financially speaking, than having the commercial movers come and pack us out and move us. So it's the same thing, with either move, either way you go, you're submitting all of your receipts to your branch. And anything that's not reimbursed that falls into the categories we mentioned earlier can be deducted on your tax return. So it would be the same whether you're, doing it on your own. Like say you, rented your U-Haul and the government says, well, we're only going to reimburse you for 5 days of the U-Haul, as an example, but you had it for 7 days. So those extra 2 days, you can go ahead and deduct that on the tax return. And you're going to use form 3903. So make sure you guys write that down. You do not have to itemize to deduct moving expenses. So no matter what your income is, no matter, whether you itemize or take the standard deduction, you can deduct your moving expenses for active duty military only.
Wow. And what number did you say that form was?
The form number is 3903.
Perfect. This is information that I didn't even know. So definitely remember these things, everyone.
Yeah.
So I wanted to move on a little bit. I'm gonna ask this one about landlords and homeowners, because we have a lot of families out there who are renting out their homes, who want to return back to the homes that they purchased or may not want to. So now let's talk about landlords and homeowners. So what if a military family is stationed, let's say in San Diego, like I am?
Right.
They're renting their home out in, let's say, Beaufort. Is there any tax breaks that they can receive for doing that while they're living in California and renting out their home in their particular state?
Right. So, with rental properties, once you move out of a home, it's no longer your primary residence and you convert it to a rental. Any expenses you incur related to the rental, you can deduct against the income. I highly recommend those of you who are, getting ready to, especially with the summer PCS season coming up, and you're getting ready to be a landlord or you already are, go on the internet and download Schedule E on the IRS website, Schedule E. So that's where you're going to report your income from the rental. It has to be reported, right? So you got to put it on there. And then you'll see the list in detail on that Schedule E of all the expense items. Advertising, you list your home on the internet, right, to find a tenant, the fees you might be paying for credit reporting, those types of things, absolutely anything related. You have repairs you made, things we can deal with when we live in our home. But then when you think about, well, a tenant wouldn't want to deal with that. Let me go ahead and fix the creaking of that door, right? Or small little things. So keep your receipt. You're going to write that off. You're going to deduct it against the income. Your mortgage interest, your mortgage taxes, on the home. So pretty much, like I say, anything that you're paying that is connected to that home from the moment it becomes a rental property or like the preparation of it becoming a rental property, you keep those receipts and you want to write that off.
Are there some things you can't necessarily write off?
Actually, no. I mean, there's nothing that, again, if it is connected to the home, and you paid
Yeah.
for it, I really can't think of anything that I've been asked. Somebody says, oh, I did this to the house. Can I write off? And the answer is no. Because again, if you can prove that it's for the home, and typically it is, right?
Mm-hmm.
Then you can write it off. Your management fees, say you have a property manager, you're going to deduct the fees you pay that property manager, anything you can think of. And that's why I say go to that Schedule E, because it's going to detail every single thing. And there's even a catch-all category, right? Other, you'll see on that form. And that's where, all those little things, HOA fees. Maybe you have somebody coming out to do your lawn care. Maybe you're paying for pest control. A lot of things we don't think about when it's our primary
Yes.
home. But once it shifts to rental, you can deduct. Because a lot of those items, when it's your primary home, you cannot deduct those things. I can have
Wow.
my whole yard landscaped and look beautiful. But if I'm living here, then it's not tax deductible. But as soon as I move out and I have a tenant in there, because again, now it's shifted to a business. And so you
Yes.
get to write off more. The only thing to be mindful of is that, you want to make sure you're depreciating that property. I see at least, oh my goodness, at least 50, clients a year contact me and they say, oh, I've never depreciated my property. And sometimes they have a tax preparer who missed it. So that's a huge thing. Once it becomes a rental, you have to take depreciation expense. And then when you sell the property, you have to pay taxes on that depreciation. So if you missed it, missed that benefit, and then when you sell it, you're going to owe a lot of money and you didn't get any benefit along the way. So just little things like that. Again, if it's on that Schedule E, is there for a reason. You should be writing it off.
Wow. That was a wealth of information. Thank you so much for sharing about that. Someone asked about Nicole. She said, what about split years?
Oh yeah, perfect, Nicole. I'm so glad you asked that because right, most of us move in the summer, right? So we're on the summer move cycle, and so you just split it in half. I know it sounds complicated, right? But it's really simple.
Yes.
The IRS has a knack for overcomplicating things sometimes, but it's really simple. So split it in half. So the example would be like our mortgage interest. You get that 1098 from your mortgage company showing how much interest you paid for the whole year, and say it totals out to be $10,000, right? So you moved out halfway through 2021. So you just divide that in half. 5,000 of that mortgage interest expense is going to be on Schedule A, which reports your primary, your individual deductions, itemized deductions, while it's your primary home. The other $5,000 is going to be on that Schedule C because during that time, it was a rental. So whatever, your percentages are, if you lived in the home only 10% of the year, maybe you only there for January, the month of January, and then you moved out. So that means 90% of the expenses are going to be on Schedule E for the rental. And then the other 10% that are deductible to you as an individual are going to be on Schedule A. I see a lot of people doing both. Like it'll be 100% on A and 100% on E. And I'm like, oh, wait a minute, can't be both a rental and your
Right.
home. You got to choose, right? And so that's a great question, Nicole. Yeah, but just do the math, based on the number of months you were there, the number of days, and then just divide it out for it's really you're only talking about mortgage interest, your property taxes, and maybe a couple like small little tax things that you can write off personally on your personal tax return, your Schedule A. And then everything else is, just going to be rental. Like you're only going to have management fees while it's a rental. That like we gave the example of the HOA expense, right? You can only write that off on Schedule E. There's nowhere to write that off on Schedule A. So you don't have to worry about, splitting it per se, but you just say, okay, from June to December, how much did I pay in HOA fees? And then you report that on Schedule E.
Wow. That was awesome. Or instead of, having to do all of this yourself, they could literally just hire you a
Right.
team.
And then there's that, right?
They can just go to your website and find you and find
Right.
out your schedule costs, your everything, and they can hire you and help them with their taxes. So before we get off here, because we're running short on time,
Mm-hmm.
we started off our conversation introducing you as a spouse who started your own business. So for all the small business owners out there, what are some top tax tips that you would recommend for them?
So one of the things I say often to other, aspiring entrepreneurs is just get started. Like just simply start, right? And so I think as military spouses, we have a tendency to delay our vision, for ourselves and our businesses and think, oh, when we get to the next duty station, oh, once I figure out what my service member is doing, or is, are they getting ready to deploy? Don't worry, just start, and you don't have to start with the LLC. You don't have to start with the corporation. You don't have to, just don't overthink it. Get started, make money, and start your business. And at a minimum, you want to just go ahead and start creating your brand, so maybe you're not at a point, like I was not at a point initially to just dive right in full time because I was a stay-at-home mom with 3 young kids living in Germany at the time.
Right.
But what I was able to do was start volunteering in my field that I knew that I, was going to start my business in, start your social media presence to establish yourself as an expert in that field, or, if it's a product you're selling, start to show people what you can do, and then you're able to scale it up, based on your lifestyle, or your personal needs and how you want to grow your business. So definitely, like, just don't be afraid, get started, and then keep track of everything. And that really applies to, all areas when it comes to taxes, not just small business, whether it's the small business, the rental, you have a kid in college, whatever is going on in your life that has an impact on your tax return, keep accurate records. Right? It makes it so
Very
much
important.
easier, this time of year when you don't have to pull all that stuff together from various places and everything's a mess. You don't remember what that charge was, speaking about a business. So keep track of it, whether it's an Excel spreadsheet, just as basic as that. That's what I used when I started out, just a basic Excel spreadsheet. But again, people overthink like, oh, I need to set up, QuickBooks. I need to do, like you just think you have to do all the things, right? Just to get started in business, and you don't. Just get started, do what you can, and then focus on what you're good at and hire out what you're not. Right. And so, obviously I'm in finance, so I can do my own finance. But if you sell earrings, like the young lady who, is selling her, maybe finance is not her thing. And that's okay. If she's really good at making earrings, then do that. Spend all your time marketing those earrings, marketing your brand, and then hire somebody to do your finances. So that's my biggest, thing. Like, get started, stay organized, and then do what you're good at and hire out for the thing that you need help with.
Well, Atia, thank you so much. And I want to add again, hire someone, hire Atia, hire her. So before we end, how can people find you? What's your website? We're going to put the links to everything, but tell us a little bit, what you're on your business, what you have there. I know you have some downloads. Just quickly run us through that so that people can quickly find you.
Yeah, absolutely. Obviously, I'm here on LinkedIn. You can reach out to me here. I'm on Facebook, my email, and we'll put that in the chat, IngramFM, like financial management at gmail.com. And then my website is IngramFinancialManagement.com. And we'll put that in the chat as well. But, I try to communicate on all platforms like most business owners, right? So you reach out to me, and usually within 24 hours, I'm able to get back to you.
Wow. And she gets back to you in 24 hours, y'all. That's what she said.
Yeah. So I strive with, I pride myself on excellent communication with clients, which is super important, right? For a small business owner, you have to be excellent in communication. So, hopefully I reach the mark.
It sounds like you do. You have been such a wealth of information today, and I'm so glad that you were able to come on this platform with Blue Star Families, and just answer so many questions that people out there have about taxes. So I am definitely appreciative. And like I said, I will be running this back, and I hope that you are running back too and listen to all of the wonderful tips and the forms that she mentioned. Make sure you go to her website. All of the links are provided for you. Make sure you get those downloads, and definitely download Atia's book as well, or resource guide. And I want to thank everyone for your time today. Thank you so much. Thank you, Atia.
Thank you. It was great talking to you.